Are we on the cusp of a global energy crisis? Well, we're here to discuss this with our next guest, Will Rhind, CEO of GraniteShares. Will, welcome back to the show. Always good to have you.
Thank you, David. Great to be back on.
You have a number of new ETFs that I like to talk about. You're entering a new space for you. So this is exciting. I like to get your take on this new sector, so stay tuned if you're watching. But first, let's talk about energy. Energy is the underlying commodity behind almost everything that we do in our society, in our economy. And right now, things aren't looking good. I was just showing you this chart offline. Let's take a look at this. So this is the Google search volume for the word firewood in German. In Germany, it looks like Germans are preparing to burn fuel the old-fashioned way this year, as natural gas prices spike. Take a look at this chart, and the full impact of the embargoes on Russian oil could just be around the corner. Well, as we enter winter, literal return to the dark ages. That's what people are afraid of. Can you comment on what's going on right now?
Well, I think there's, very, very real cause for concern. And, as you pointed out, fuel prices, domestic fuel prices, obviously, because at the end of the day, that's all that matters to the consumer is what price they're paying for their fuel. And, a lot of people, I'd say the majority of people, regardless of whether you're in Germany, but in all European countries, are getting big and very nasty surprises, when they look at their fuel statements. So we've already started to see some kind of, beginnings of grassroots organization, particularly in the UK online communities threatening to kind of, not pay, so to speak, but, mass numbers of people rebelling against paying their fuel bills. And I think you're going to see this escalate clearly if something doesn't happen to reduce the impact of these costs on households. And, as you see with Germany, with the firewood, this is a real problem for people coming into the winter season, something that, we've been concerned about for some time. That it's fine in many respects, been a very hot summer, in Europe and around other parts of the world as well. But coming into winter, there's always going to be the biggest worry. You have at the moment the Nord Stream 1 pipeline shut down again. The Russians are saying, well, that's for temporary maintenance. But this is becoming a bit of a pattern. And again, very worrying coming into winter.
Okay. You're from the UK, Will, so this next story might hit close to home. This is from The Guardian. Headline is Energy Crisis, UK Households Hit, or Worst Hit in Western Europe, finds IMF. Just going to read a few paragraphs here. The energy crisis is hitting the UK household budgets harder than any other country in Western Europe, according to the IMF. The reason is the UK's heavy reliance on gas to heat homes and produce electricity at a time when Russia's war in Ukraine has sent gas prices soaring. In addition, the UK has the least energy-efficient homes in Western Europe, and according to this chart that we're going to show the audience, a typical a British household spends more than 8% of their household budget on energy in a given year. And so this is obviously a problem across all countries in Europe, not just Germany. What is the solution, do you think?
Well, I mean, the solution is it's not easy. But compound on top of that, David, especially in the UK and parts of a lot of Europe, is that there's just been no investment or a severe lack of investment in the traditional development of, particularly in oil and gas, over the last decade, and that's really just compounding things. The solution that politicians have tried specifically over the last couple of years is to advance more sustainable sources of energy, particularly green sources of energy. In the UK, for example, a lot of wind power particularly. But this has not come online quick enough and in any way, shape or form in the sort of size needed to offset these losses that we're seeing in traditional energy sources. So I think one source, particularly the UK government has been touting out, really as we speak, is much more really, I suppose, seismic, investment on the nuclear side. I think nuclear power has now to come to the forefront again after so many years of really being pilloried by the political establishment, to be now a new and reliable form of energy.
Let's go over basic living costs going up all around the world. Take food, for example. It has been going up. It's come down a little bit in the last couple of months, but food prices have been elevated. If you have a mortgage, your mortgage costs are probably going up if you have a variable rate. If you're, if you're in Europe, you're experiencing an energy crisis, so your energy bills are going to go up. That doesn't leave a lot of room for discretionary spending. Assuming these problems are not fixed by, let's say, winter, Will, what's going to happen to the economy, you think?
Well, I think this is really the big question is, we've talked about this, David, on your show in the past, that it's fine to talk about the high inflation that we're seeing, and we've talked about some of the ways that could game out, but really what it comes down to time and time again is the consumer. And obviously in the United States, the consumer represents such a large part of GDP, and obviously in the Western world, consumer is so important. And we've really been discussing this since the beginning, which is at what point does it all become too much for the consumer? In other words, what point do we see demand destruction from the consumer that really, starts to bring inflation down in a real way? And I think, certainly my response to that was, it's just too early to say. And I think we really had to get through this next winter, or this upcoming winter, in order to really get a better gauge for how resilient the consumer is, because a lot of these inflationary effects that we've seen in the economy, really I think are going to bite towards the end of this year, beginning of next year.
So I want to get your take on two variables, and then we'll move on to other sectors and commodities, Will. So first, I mentioned mortgage rates, so interest rates. What is your view on Fed monetary policy, or actually central bank policies around the world? But let's focus on the U.S. Fed for now. What do you think the Fed's going to do at their next meeting and beyond? They've already hinted at the Jackson Hole Symposium not too long ago that an unusually large rate hike could be around the corner at the next meeting. Is that something you think they'll follow up on, Will?
I think that we'll see more rate hike. I remain skeptical that there's going to be a sort of an abnormal or an outsized rate hike to the upside. I'm just not sure the economy is in good enough shape for that to happen. I was almost a little bit surprised by the rhetoric, certainly the way the market's taken the rhetoric of the last meeting.
Yes.
You go back into a much more risk-off phase in the market, seeing risk assets sell down, interest rates or financial conditions tighten yet again. And I think that, coming into year end, when we start to see some of these inflationary effects play out, we know already that we're seeing a big slowdown on the housing side. And part of what we're seeing, obviously, on the energy side, David, is that this posturing, particularly around the slowdown, is affecting perceived demand for oil. Slowdown in China is very real. Now concerns, obviously, about India, about Brazil. So this is really starting to play into the whole energy game at the moment.
Okay, yeah, let's talk about energy. Your views on oil. Do you think it'll go above or significantly below $100 a barrel by the end of the year? And your reasons why?
I think that on the oil price side, that the risks remain skewed to the upside. And the reason for that is because, yes, I accept that, demand over the summer has been lower than certainly in 2020. So the higher gas prices obviously seem to have at least curtailed some of the effects in summer driving season here in the US. But I think, again, coming into winter, the risk is skewed more to the upside because it's really still supply that has the big problem. The only X factor, as we keep on saying, is the consumer. And, if we really start to get into a sort of financial conditions that are materially tightened from here, then we could see demand fall and obviously the price of oil fall into year end.
Okay. Finally, do you think that elevated energy and food prices could cause potentially political instability, either domestically and or abroad?
Absolutely, and it's already happening. In Europe, we have to talk about the fact that, on practically every major political agenda has been the talks of capping fuel prices, talks of some kind of intervention in energy markets, particularly around, either providing subsidies or caps. But again, that is the government intervening in energy markets. we've obviously heard that here in the United States as well, albeit around perhaps more specific state level type circumstances at the moment. But again, this is all around what do politicians do about this crisis, and the longer it goes on, how do you try and make situation as bearable as possible for the consumer?
Strangely enough, we're getting inflation that a lot of younger people have never seen in their lives. In the UK, it's already double-digit inflation, and those are government numbers. In the US, people argue it's double-digit, but officially it's no. The highest we've gotten is 9.1%. It's curious to me how younger people, or just people who are angry in general, aren't out on the streets protesting. I don't see a lot of social unrest here in Canada, at least. I don't know about you, New York.
No, and again, I think that goes back to the consumer argument, which is not yet. But at what point do people start? I mean, in New York City, I can tell you, where I live, David, as you know, that rents just hit an all-time high. Now, obviously, rent makes up a much, much larger part of a young person's budget than, say, something like energy, because a lot of folks, obviously, here in New York don't drive a car, and energy is not probably as big a part of their monthly outlay as, say, something like rent. So I think we're going to start to see that drift through, particularly on the housing side, where that is becoming a real issue for people.
There was a gentleman a while ago, I can't remember what his name was, but he was running for mayor of New York, and he was running for the party called the Rent is Too Damn High Party. He didn't get voted in, but I think he'd be popular now if he reapplied to run again.
Might get some more votes now, right?
Yeah, probably. They will probably get a lot more traction. All right, Will, I want to move on to talk about your new leveraged ETFs, the first of their kind, I believe. So you got leveraged long and short Tesla, Coinbase, and Apple. This is new because you've been on the show for many, many years, and you've been heavily focused on commodities. We've talked about your commodities ETFs a lot. Why are you heading into the tech and crypto space now?
Yeah, so what a lot of people probably don't realize, David, is that in Europe, we have this business. We've been doing this for a few years, where we have levered ETFs on single stocks, both long and short. And when we think about the GraniteShares business, a lot of what we talk about clearly on your show is we talk about longer term investing, and that's our funds and strategies on the commodity side, on the income side, and on the equity side. But there's another part of our business which is much more focused on short term investing, and particularly using leverage strategies in this particular case to go long and or short on popular stocks. So in the United States, we just launched a series of levered ETFs on single stocks. So for example, Tesla, where we have the ability to go leveraged long and then short Tesla, Coinbase, and then Apple. So those are 4 funds, more to come.
So you've already launched these ETFs, right?
That's right. We launched them just a few weeks ago. So they're still very new.
I'm just curious. So you've got a long Tesla ETF and a short Tesla ETF. So long is 1.25 times long, and then short is 10. Which one has more volume right now?
At the moment, actually, the long one, which I can tell you from what we've experienced in Europe, there's definitely some cyclicality to it. And that's part of the reason why it's just one of those sort of stock phenomena where you have a huge amount of interest, on the long side, but you also have a huge amount of interest on the short side. And particularly shorting, if you think about it, just not many investors actually have the ability or have access to short strategies. So it's something that we've had success in Europe. And it's interesting because it's not just from European customers. You have customers all around the world, particularly in Asia and other parts of the world, where, obviously they have difficulty getting access to the short strategies. So it's been something of an interesting phenomenon to watch.
I was going to ask you if, you being a smart, experienced fund manager, you maybe have a view of the market that you think things are going to go up or things are going to go down. And so you're making a fund in anticipation of this move, but you've got both long and short. So I don't know if this is a reflection of your own personal views. I think you're just being clever. But do you have a view on where the tech sector and stocks overall are heading?
So just to answer your question specifically, It's kind of interesting because our experience, again, is that rightly or wrongly, or for better or for worse, that investors still have a preference towards the long side.
Interesting.
So that's why we have the 3 longs and we have 1 short. And one of the standouts, or one of the exceptions, is Tesla, where we see I can't say it's necessarily an equal amount of interest because, like I said, there's a cyclicality to it, but there's definitely a huge amount of interest on the short side as well as the long side. But for the most part, I think it's just the sort of the psychology of investing that people prefer to buy something with the anticipation that it's going up rather than down.
So the single stock ETFs in themselves are an interesting instrument. One could argue that if I wanted to lever up myself, I could just trade a margin, or I could use my own leverage. What is the advantage of investing in a single stock ETF that has leverage built in?
Well, the main one is that, when you go through margin, not everybody has access to that. And when you do have access to it, you have to pay, in many cases, very high fees to borrow that money. And you're subject, therefore, to margin calls, which mean that a lot of times when people lose money using leverage is because they get stopped out or they get called away. And that is to say that when the position that they're in moves against them, the broker asks for more money from you in order to protect themselves against those losses. And that can end up, not just costing you money, but ended up, stopping out of the trade. And I think the final thing is that, when you do that, it can actually expose you in some cases, depending on the broker, to unlimited losses, which can be obviously extremely dangerous. Whereas in an ETF, the one thing you always know is you can't lose more than your investment. So within that ETF wrapper, there is no margin, no need for a margin account, no margin on a daily basis, and you can't lose more than your initial investment.
Mm-hmm. Right. And so some of these ETFs here I'm looking at, so 1.75 times long Apple ETF, do those exist in the marketplace already?
No, they don't. So leveraged single stocks as a category just came out literally in the last few weeks. So there are a couple of other firms that offer levered ETF funds as well, but we all sort of launched them around the same time. And this was largely in part due to a regulatory rule change that happened here in the US that sort of made this recently possible for firms to come into this market and establish this new category.
Can you go into a little bit of detail as to how these ETFs are levered? Can you explain, is it because of options, or how are they constructed?
Yeah, it's interesting. I've actually, people have asked that before, and it's not options. It's a swap contract, which is a form of derivative or a derivative contract, typically with an investment bank or provided by an investment bank. But we use swaps to gain that leverage in the fund. And that's actually the way that, I'd say the majority or very large number of levered funds just more broadly get exposure.
Well, given that it's a swap, an investor might say, Will, I'm worried about counterparty risk. How would you address that?
Yeah, so that's a very good question. And, these funds, they're meant for short-term investments. So they say sort of daily in the name because they rebalance daily. And so typically investors that are holding them for a very short period of time. Now, obviously, counterparty risk, not to sort of make light of that because it's a real thing, but typically investors are holding it for such a short period of time that it shouldn't be really something that is, the highest risk profile.
When are you coming out with a spot Bitcoin ETF, Will?
Well, as you know, we've been in the Bitcoin ETF game really since the beginning. Obviously, we tried to launch a futures fund right from the very start, and that's, as I'm sure you've documented very well in the show, there's been a huge challenge with the regulator. I still think on the spot side, we're probably some way away from that happening in the US, at least until these new crypto regulations really come into play that will provide a framework, I think, for ultimately for a fund. But somewhat away from that at the moment. The closest thing we've got is the CONL, the CONL, which is our leveraged Coinbase ETF that we launched.
You've no doubt submitted requests to regulators. What's holding them back in the U.S., do you think? In Canada, for example, it's already allowed. You should move some of your business to Canada, by the way, but for that reason, I jest. But yeah, what's holding back the U.S. regulators, Will?
I think at the core of it, David, it's the fact that this is a market that's not regulated, not just by the SEC, but by any sort of national regulator. And I think that it's really always been about that. And I think that once there's some regulatory framework in process, then that will be allowed to happen. But yeah, as you say, certainly other markets have been able to get past that and allow not just ETFs but just crypto products more broadly to kind of flourish in the public markets.
All right. Well, when the regulators send you a mail and say, "Hey, Will, I think we can go ahead with this," please let us know. We'll have you back on the show and talk about that. For now, thank you very much for your time. Good luck with your new launches, and we'll talk again soon.
Thanks, David. Much appreciated. Always a pleasure to be on your show. Thank you.
And thank you for watching Kitco News. I'm David Lin.